You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 30th day of August, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. For those of you that were in the live training room this morning, you saw the completion of the 2420 blueprint, which began 20 months ago. That would be January of 2023. Adding one contract per month with profits earned in the market, just as the 2420 blueprint lays it out. It's complete. So that deserves a bell. And the methodology has been greatly simplified. So if you've not been in the live training room for a while, if you've not taken the free trial, go to mytradingiq.com. At the top of the page, there's a link. Just click that purple button, fill out the registration form, hit submit, and we'll get your indicators indicating today. So you'll have the long weekend. Monday's Labor Day. So you'll have all weekend, and then your trial will officially start Tuesday. So that'll be 4 days. Then you'll have another weekend. And then your fifth day will be a week from Monday. Now, because Monday is a holiday, of course, we won't be here. The markets won't be open. And the weekly trading zones, which typically come out Monday morning at 6:15 a.m. Eastern. Whenever there's a Monday holiday, they come out Tuesday morning at 6:15 a.m. Eastern. So, this is our second live broadcast of the day. The first live broadcast each day is our live training room. I recorded the live training room and I actually streamed it live on YouTube. I think it was Wednesday. So you can go to our YouTube channel, youtube.com/CFRN. You can get an idea of what the live training room is like, get a real feel for what's happening, see the new simplified methodology. And if you've taken a trial more than 6 months ago, you only get 2 trials per lifetime. They have to be 6 months apart. Or if you've never taken the trial, then mytradingiq.com, just click that purple button at the top of the page, and when you fill out the registration form, make sure you fill it out properly and honestly, okay? Because if you don't, it's an automated process. And when you hit submit, if you haven't, taken the time to fill it out properly and honestly, we won't get it. We won't even know you want to take a trial. If you've taken a trial in the past, maybe you've taken 2 trials in the past. But after you watch that video on our YouTube channel and see the new simplified methodology, if you really want to take another trial, send us an email, support@cfrn.net. In the subject line, just put "another trial, please." And then in the body of the email, in a couple of sentences, plead your case. And I'm pretty positive we'll give you the green light. Okay? Unless you're a serial free trial taker, and then of course we won't. So anyway, when the live training room ends every day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. The live training room, that's for members only and those taking the 1-week free trial. But this broadcast, everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this broadcast live each afternoon. Best way, you only have to do it once. Go to mytradingiq.com. This time, scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email, about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Now, there'll be days when you're out of the office, away from the desktop, tending to other things, but you still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel. It's easy to remember, youtube.com/CFRN. You already got the YouTube part memorized, I assume, so just remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, go to another day, watch a little bit. Obviously, the more recent episodes are going to be more relevant to what's going on in the world and in the markets. But take your pick. Again, there's over 2,600 daily episodes waiting for you at youtube.com/CFRN. So this is our daily schedule. We open with our devotional, word of prayer, some world and market news, a recap of the alerts. About 12:50 or 50 minutes into this broadcast, if you're watching after the fact, Michael will join us, give us a recap of what happened this morning in the live training room. And then at the top of the hour, we'll go live on the TradingView platform, do some live trading for 30 minutes. And I'll wrap things up with our good word for the day. So let's get after it. Now, the topic of our devotion this week, next week, and I think we'll even spill over into the following week. God's dream for your life. You know what it is? Well, the purpose of this whole devotion is to help you figure that out. Our scripture today is Job 37, verses 14 through 18, and I'm going to share it with you from the Message translation. beginning in verse 14. Job, are you listening? Have you noticed all this? Stop in your tracks. Take in God's miracle wonders. Do you have any idea how God does it all? How he makes bright lightning from dark storms? How he piles up the cumulus clouds? All these miracle wonders of a perfect mind? Why, you don't even know how to keep cool on a sweltering hot day. So how could you even dream of making a dent in that hot tin roof sky? Job 37, 14 through 18, and that was the Message translation. If you like the these and the thous, you can always go to the King James Version and pick it up there. Just remember, Jesus and the disciples, they didn't speak in King's English. A lot of people get hung up on that. Oh, there's only one translation. You can trust the King James. Yeah, well, if you do a history on how the King James is put together, you might change your way of thinking. So, today, want to hear God? Get still and listen. You have to be quiet in order to hear God speak. If you want to hear God's vision, then you're going to have to turn off the television. You can't listen to God and the TV at the same time. The reason why God may never speak to you could be because you're never quiet. Something's always going on in your mind. So while God is trying to get through to you on the telephone of life, he's getting a busy signal. You've got to reserve time alone with God. Now, think about how many times of the day that you're actually still and quiet with your mind focused on God. You might say, well, I listen to praise and worship music all day long. Okay. Are you listening to the singer, the musicians, and God at the same time? Now, I'm all for praise and worship. It's one of my favorite parts of going to church every week. Podcasts. Everybody's got their favorites. And pretty soon, your library, each day when you turn on your phone, there's probably more episodes dropping on that day than you can even listen to. So I'm going to take a walk, spend time with God, and listen to stuff you should know. Or Unashamed. Unashamed is a Christian podcast. It's from the Robertson family. Remember Duck Dynasty? Yeah, those guys. It's a great podcast. However, I enjoy listening to them, but listening to them is not listening to God. I'm getting a third-party translation of whatever God has spoken to them. I want to have my own experience. I want God to speak to me about my life and his dream for my life. The Bible says in Job 37:14, pause a moment, Job, and listen. Consider the wonderful things God does. God wants to spend time with you. He says, pause, be quiet, get alone, and learn solitude so I can talk with you. Sometimes as adults, we get spiritual wiggles. We just cannot get still and be quiet. Is getting God's dream for your life worth a day of your life? Have you ever taken an entire day and done nothing but be alone with God? Talk to God in prayer. Let God talk to you through His Word. Relax. Think. Write down the thoughts He puts in your mind. Set some goals. Look through your schedule. Set your priorities. Spend the day saying, God, where do you want me to go? What direction do you want my feet headed? In fact, every morning when you wake up, one of the best things you can do is say, good morning, God. What do you want me to do today? If you start your day off with that mindset, chances are you might have a good day. God speaks to people who take the time to listen, not just for a day, but also on a regular basis. This is called a quiet time. You think you don't have time for this? We're talking about figuring out why you're here on earth. So trust me, you've got to make the time. Join me in a word of prayer. Heavenly Father, we stand in awe of your mighty works and the power displayed in all of creation. As we consider the wonders of your hands, help us to pause and listen to your voice in the midst of the storms of life. Teach us to trust in your wisdom and timing, knowing that you are in control of all things. May our hearts be still before you, recognizing your greatness and your majesty. Guide us, Lord, in our daily walk, and let us always be mindful of your presence. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Friday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Mixed markets again. Here we go. The Dow down 76 points. The NASDAQ up 52. S&P 500 up almost 9. The Russell 2000 down 5. That's some pretty quiet trade. In the commodity basket, crude oil down $1.80, trading 74.11 last. That's a drop of almost 2.5%. Gold down $24, trading 25.36.30 last. That's a drop of almost 1%. Silver down 60 cents, trading 29.38 last. That's a drop of a little over 2%. Remember, when the price of silver moves $1, that's worth $5,000 per contract traded. So being down 61 cents now on the session, that translates to over $2,500 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 285 points. The Shanghai rose 19. The Hang Seng gained 202, which is almost 1.25% for the Hang Seng. In the European markets at the close, FTSE down 3, the DAX down 6, the CAC down 10. Wow, that really is some quiet pre-holiday trade. Now, they don't do Labor Day in Europe, but obviously what's happening here in the U.S. is having an effect around the world. It didn't affect Asia too much. They did okay. But the UK, it was quiet, and it's relatively quiet here in the US of A. So, take a look at some news. Tropical storm Shanshan made landfall on Japan's southwestern island of Kyushu as a typhoon yesterday, with maximum sustained winds hitting roughly 156 miles per hour at landfall, put millions of people under evacuation orders. Shanshan, which at landfall was the equivalent of a Category 4 hurricane, is believed to be the strongest to ever hit the region and has resulted in at least 5 deaths so far. We had a typhoon come through Phoenix once. It peeled the roof right off of our church. Interestingly enough, just a few days before, I had been sitting in the sanctuary, and as I looked up at this old shingle roof from 1938, I was praying, God, how are we going to put a new roof on this church? And it was so steep. It was a beautiful old historic church. I know most of you have seen pictures of it. And that was my alone time with God that day in the sanctuary. I spent a lot of days like that. Well, he didn't answer my prayer that day or the next day. But within a week, a typhoon touched down in downtown Phoenix, only 70-mile-per-hour winds. It just peeled that old shake roof right off. The good news is the insurance. While I couldn't afford to put a new roof on it, the cost at the time was 40 grand. That was back in, I think 2005. Cost was 40 grand to redo that roof. But the insurance company paid for it. All of it. That's a good thing. So, this typhoon that just hit Kyushu, 156 miles per hour at landfall. Wow. Keep the people of Japan in your prayers. The 2024 college football season gets into full swing this weekend, kicking off a year that will see more changes than almost any in the sport's 155-year history. Most notably, postseason will shift to a 12-team playoff, with the 4 highest-ranked conference winners earning byes and 4 teams hosting on-campus playoff games for the first time. The format replaces the 4-team playoff used since 2014. Separately, conference realignment means traditional West Coast powers, UCLA, USC, Washington, and Oregon, will play in the Big Ten, while Texas and Oklahoma will join the SEC. Fresh faces will be featured as a few top-tier programs. Nick Saban retired from Alabama after 17 years and 6 titles with the Tide. Up north, Jim Harbaugh left defending champion Michigan after winning the team's first title since 1997. In market news, the latest reading of the Fed's preferred inflation gauge showed prices increased at a pace in line with Wall Street's expectations in July. The core personal consumption expenditures, that's that big news event we've been talking about all week, the PCE index, which strips out the cost of food and energy because, well, we don't use those, and is closely watched by the Federal Reserve, rose 0.2% from the prior month during July, in line with Wall Street's expectations 4.2%, and the 0.2% reading seen in June. Over the prior year, prices rose 2.6% in July, matching June's annual increase and below analyst expectations for a 2.7% increase. Now they're calling it a Goldilocks PCE. A fresh reading on inflation keeps the Federal Reserve on track to cut interest rates in September. Jamie Cox, managing partner of Harris Financial Group, said this is as Goldilocks as it gets for the PCE. The consumer remains strong, and this inflation is clear in the data. OPEC is set to proceed with a planned oil output hike from October, as Libyan outages and pledged cuts by some members compensate for overproduction, counter the impact of sluggish demand, 6 sources from the producer group told Reuters. 8 OPEC members are scheduled to boost output by 180,000 barrels per day in October as part of a plan to begin unwinding their most recent layer of output cuts of 2.2 million, while keeping other cuts in place until the end of 2025. A slowdown in demand growth, notably in China, has weighed on oil prices and prompted some analysts to doubt whether the organization known as OPEC will go ahead with the October increase. We had lots of news this morning. The U.S. consumer sentiment improved in August for the first time in 5 months, as slower inflation and prospects for the Federal Reserve interest rate cuts helped lift expectations about personal finances. NVIDIA is facing a looming test of the use of its chips. And that article doesn't want to load. That's important news. I'll try to get it to you before the end of the broadcast. Now, I'm sure a lot of you use Spotify. Every day, millions of people use Spotify to stream music and podcasts and audiobooks. A few years ago, it would have felt like an impossibility. Click and bam, a seemingly endless catalog of recorded music opens up right at your fingertips. Streaming now accounts for most of the money generated by the music industry, a whopping 84% in the United States, according to the RIAA, and 67.3% worldwide, according to a 2024 report by the International Federation of the Phonographic Industry, which tracks global sales. Spotify is the largest platform of all, making up roughly 31% of the total market share, with a reported 626 million users and 246 million subscribers in over 80 markets. In July, Spotify increased its monthly subscription cost. So how does money from advertisers and subscription fees move from Spotify to artists' wallets? How does Spotify pay artists and songwriters? Well, let me give you the short answer. They don't. Spotify pays roughly 2/3 of each dollar it makes from music streams, a collection of paid subscriptions and advertiser income, to the rights holders of the music on its platform, paid out between recording and publishing agreements. Those rights holders usually comprise a combination of record labels, distributors, aggregators, and collecting societies. Think Sony, Warner, Universal. The digital music licensing organization, Merlin, that represents independent labels, who then pay their artists according to their contracts. If an artist is self-distributed, they might pay a small fee to an aggregator or upload service. The self-distributed artist keeps the majority of the royalties, or it goes to their label and their publisher. Payments to right holders are determined by a process called stream share. What is stream share? When you walk into a store and buy an album, a percentage of that amount goes directly to an artist. When it comes to streaming, subscription dollars are collected into one large pool and paid out via stream share. A number Spotify calculates by adding up how many times music owned or controlled by a particular rights holder was streamed in a month. In each market, and dividing it by the total number of streams in that market. I'm sure you've heard that musicians these days, they really got to love what they do, because the days of making the big bucks, well, I mean, there's still groups, when they go on tour, that's really where they make their money. Concert tickets, t-shirt sales, etc. Music industry has really changed. All right, let's go to Logic 247. But I'm going to have to put you on hold for just a second. We'll be right back. Back. Don't go away. All right, back. Sorry for the interruption. Believe it or not, some things in life are beyond my control. Hopefully that doesn't happen to you. So where were we? We're about to take a look at Logic 247. That is our 24/7 around-the-clock E-mini alert service. We're in week 317. It's not just E-minis, it's also crude and gold and silver and euro and bonds. Over the last 317 weeks, we have issued over 17,700 individual handcrafted alerts. And what we've averaged over those 317 weeks is 20% or less of the alerts being stopped out based on market structure, and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week, as of 6:30 a.m. this morning when Valerie did this recap, now of course there'll be some changes today. She'll update and finalize the recap for the week. But at the time she did the recap, we had 50 alerts issued, 2 never triggered. We're still waiting on the outcome of 12. That gave us 36 actionable alerts, of which 28% would have been stopped out. Again, based on market structure and that very simple process we teach all of our passport holders. So it looks like we'll probably end the week above that weekly average. But when you stack that up against 317 weeks, probably won't move the needle too very much. And we've had weeks of 0% and 2% and 3%, 10%. But the average, 317 weeks, which is kind of a long time. It blows my mind. So we'll have the final numbers this afternoon. Purpose of the Logic Alerts is to teach our new traders how to read the chart, how to find windows of opportunity using a larger time frame. All alerts, the Logic and the Concierge alerts, are all based on the 30-minute chart. Now in the morning you're used to watching tick charts in the live trading room. But the alerts are based on time-based charts, the 30-minute. Nothing magic about 30 minutes. It's just a time frame I chose years ago, and it's worked pretty well, so they say if it's not broke, don't fix it. So each Logic alert has an entry price, an initial target designed to get your goal for the day, and then additional targets and a final trade to target. So if a new trader takes each Logic alert of the markets they trade, or to speed up the process, you can do it with any Logic alert. Go to the 30-minute chart of that market and draw horizontal lines at the entry, at the initial target, at the additional targets. Look left, and you'll see that each one of those, like from the entry to the initial target, that's good for your goal for the day. And then if price trades through that target, you've got a whole new trade on your hands to the next target. So let's say you miss the initial entry price. That's okay. Maybe you're looking at an alert that has 5 or 6 targets. From target to target, each one of those can be viewed as an individual trade. So by drawing those horizontal lines, pretty soon you'll be able to look at a 30-minute chart and know with a high degree of probability what the next high probability move is. Just don't make the mistake of relying on the Logic alerts to trade by so that you don't have to learn how to trade. Use them as the tool they're intended to be, which is to help you learn how to read a chart and to know the high degree of certainty what the next high probability move is. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Day session is their night session, and vice versa. Our original alert service, which we had long before Logic 247, for the concierge trade alerts. Now, they're a little bit different. These will help you once you've learned to read the chart, okay? And to understand where price is likely to run into obstacles or targets. Unlike the logic alerts, which come out around the clock, the CTAs are published as a static report shortly after the Globex open each evening. So the Friday session began last night at 6 p.m. Eastern. 20 minutes after the open, all of our members, all of our trial members, had access to all of these targets. Now, every day I go through all this, but if you're a member, you've got access to it. And even if you're on a trial with us, you have access to this. So I'm not going to read it all and explain it all today. You can go to youtube.com/CFRN and pretty much grab any day at random, and you'll hear me go through a full explanation of the CTAs. Let's go see what's happening in the market right now. Very interesting. Okay. We know that we got trapped in this area here for quite a few days. Now, this is the Friday candle. This was yesterday, where we came down just shy of the daily BBC and the 24% fib retracement. On a daily chart, that's about, that's close enough. We expect support at a fib retracement on the way down. And when price pulls back to the BBC, that's the green line, bull bear cross. Bearish below it, bullish above it. Bearish below it, bullish above it. You'll notice the pullback holds more often than not, whether you're pulling from below or pulling from above. But eventually price will trade through, and then when it retraces, the pullback holds more often than not. Leg, retracement, pullback holds, then this huge leg we had, and then look how quickly we recovered. This recovery, compared to most of this year, that was unusual. And then we hit a brick wall here at the 50% fib extension. Price has found resistance at the 50 and support at the 38. Oh gosh, for 1, 2, 3, 4, 5, 6, 7, about 8 trading days. Now today we had a big green candle, but it didn't quite make it to the 50% fib extension. Okay. And now we have dropped below the 38% fib extension, which has served as pretty good support for quite a few trading sessions. Now this wick sticking up above the 38 and the step line, that's an indication that price is going to attempt to move back down to the 24% fib extension and then the 24% fib retracement. Now the purpose of looking at a daily chart, no matter what you trade, futures, stocks, crypto, Forex, ETFs, is you're looking at what the institutional traders are looking at. They look at daily, weekly, and monthly charts. Well, you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size and the incredible size they trade in. So, what you're doing, if you'll spend 2 minutes with the daily chart of whatever you're trading, before you drop to your smaller time frames and start trading, you'll have a pretty good indication most days what the deep pockets are doing. So when you see what the deep pockets are doing, you've got to only do what they do long enough to get your goal for the day. It really kind of simplifies the process. It also helps you identify these major areas of resistance and support. Okay, we've broken through a major area of support. Now we're just off the low of the session, but what looks like a greater high probability to you? That price is going to work its way down, or it's going to certainly reverse, take out the 50, get above balloon climbing, take out the 62, and challenges the new all-time historic high. Now, it very well may do that. But first, I think we're going to see another retracement back down to the daily BBC. So again, whether you trade futures, stocks, crypto, Forex, ETFs, just spend a couple minutes looking at the daily chart. See what the institutional traders are doing with whatever market it is. Remember, our strategy and our indicators, they're not designed to outsmart the institutional traders with their infinite resources. They're designed to help us see what they're doing and with the larger time frame, an understanding of why. And then when you drop to your smaller time frames, you can trade on the right side of the street. If you try it for a couple weeks, I think you'll see that it's beneficial. All right, 30-minute chart, that's where all the alerts are created, logic and concierge. The vertical line separates today, Friday, Thursday, Wednesday. When price, now these are the zones that were published Monday morning at 6:15 a.m. Eastern. Published the zones since December 14th of 2009. So this December will make 15 years. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. Drops to a zone, support. Up to a zone, resistance, until proven otherwise. Pushed through, got a retracement. That's how price moves. Rarely does it move in a straight line. Leg retracement, leg retracement. And then we put in this high yesterday at 56.63.75. Today, the market, we opened last night, 6 p.m. Eastern. That's when the Friday session began, right at the weekly zone. When price encounters a weekly zone, 70% of the time you'll see consolidation. 20% of the time rejection. 10% of the time the slice. So we consolidated along the weekly zone. Red and falling turned to blue and climbing. And then right here at the London Open, you had the perfect stack. Price, step line, blue and climbing, BBC. And it took us right up to the long target. See that? Okay. So we consolidated along the target, finally hit the zone, which we expect to be resistance till proven otherwise. And price tried really hard to overcome it, but it held as good resistance. Good enough for blue and climbing to turn to red and falling. That's an indication lower prices are coming. We're just now getting the bearish cross on the 30-minute chart. Price came right down to the zone where we found support last night. We consolidated for a couple candles, then we dropped right to the short target. So from the open up to the long target, and now down to the short target. at 5603. So that's the ES. We'll pick up with the YM when I come back. Michael's here. He's going to give us a recap of everything that happened in the live training room this morning. Then we'll go live on TradingView for 30 minutes, do some live trading. I'll come back, finish the recap, and wrap things up with our good word for the day.
Good word for the day. And the weekend.
Yeah. All right, looks good.
Right. Excellent. Excellent. All right, here we go. Good afternoon, everyone. Today is Friday, the final business day of August. Now, if you have not taken a free trial of this, I have to go out here and refresh this page. Let's just close that one and we'll go to this one. If you have not taken a free trial with us and you'd like to take a free trial with us, make sure that you go to the right place. It did. Okay. Then just go here to mytradingiq.com, click on the purple button right here. Now the purple button does not require a credit card. All right. Oops, there's no credit. Didn't do that. There's no credit card required for the free trial. It's going to bring you to this registration page where all that we ask for on this page is your name, your email, your phone number. There's 5 multiple choice questions down here at the bottom. You can give us your machine ID, or you can give us your TradingView login ID, or both. If you don't have a TradingView login ID, you should really, really get one. Okay. Go here to mytradingiq.com and go to trading platforms and just follow the rules for the TradingView login platform, the TradingView platform. All right, because we have stuff that's available on TradingView that is not available anywhere else. This guy right down here is not available anywhere else. So, oops, I didn't mean to do that. Let's undo that. There you go. If you want to take a free trial, go do all that stuff. Okay. Now, we are finishing the 2420 blueprint today, and we're finishing the month of August today, and we're finishing September, October, November, December. Yeah, we're finishing the month of August today. We had a good day today. It ended up working out pretty well. We did have this one period where we had 3 different trades on 3 different markets, and 2 of those stopped out. One of them gave us 20 ticks, but 2 of them stopped out. But anyway, I'll get into that in a few minutes. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 30th day of August 2024, the final day of August. We made 265 ticks on the NQ, and that was actually including a couple of stop outs that we had on the NQ along the way there today. And we had we made 2 ticks on the Russell. We were minus 23 on the YM and plus 9 on the ES. That put us at plus $1,332.50 this morning. So that was our second best day of the month. And this did end up being our best day of the year, our best month of the year, $11,847. We're wrapping up our 2420 blueprint with the best month of the year, which is great. Today it took 4 minutes and 2 trades to get to $4,800, and we took a total of 26 trades this morning. So the markets were really volatile today, so we had a ton of trading going on this morning. All right, now on the month, over 22 business days, we're averaging $538 per contract per 2-hour business day, and on the year, we're now at $69,800. That is with one contract. All right, on the year, we're averaging $428 a day with one contract.
Michael, right. You might want to explain that. When you say the 2420 blueprint has come to an end, that doesn't mean next week we're going to fall off the end of the earth.
No,
it will be business as normal. The 2420 blueprint, it's not an indicator. It's what it's called, a blueprint.
A concept.
It's a concept to teach you how to start in sim, qualify to go live with one contract, and then add additional contracts with profit you earned in the market. The 24 blueprint also helps you write your business plan and your trading plan, 2 important things you need. So I know,
yes.
I heard it, I could hear it in people's thoughts last night in the workshop, like, oh my God, this is the end. No, it's just the beginning.
It's not the end.
It's just the beginning.
It is. It's, I'm not going to add more contracts next month. The last 20 months, every time we went to a new month, I added a new contract. I'm not going to do that next month, next week. As a
And
matter of fact, next week I'm going to continue this right here next week.
each
All right,
additional
so
contract created more slippage.
it did. It made, and there's a point where it becomes inefficient, where the number of trades, the amount of slippage, the amount of time it takes me to get the goal for the day. My goal really is to get the goal for the day every single day, to get the goal for the day. And in doing that, I'm able to teach everybody that's in the room how to get the goal for the day and watch them watch me use the indicators, the stuff that they have in front of them. So starting Monday, I'm still going to be doing the same thing. I'm not going to be changing anything that I do. It's just going to be with fewer contracts. I'm not going to go to 21
Tuesday.
contracts. Tuesday. I'm not going to go to 21 contracts. I'm probably going to go down to 9 and finish the 24/20 blueprint that I started, or that would have been started if I had one contract in January. All right, I'll go to 9, 10, 11, 12. Finish the year out with this column being added to every month. Okay, this column being added to every month. This column right here is going to stop. This is the end of the 24/20 blueprint right here. These columns right here. If I were to make them a different color, we'll make them green. That is the end of the 24/20 blueprint right there for the year of 2024. Now, this is going to continue over here. I'm going to continue it on down here. It's just these numbers won't be added to anymore right in here. Right? So all the formulas between here and here, I will delete. I don't think I have any in there anyway, but I'll delete them. And the rest of it's just going to continue through. All right, so I'll go to 9 contracts starting Tuesday, and then 10 next month, and 11 in November, and 12 in December. And then starting January, I'll probably just go with 10 contracts starting in January. Right? I mean, the thing that we're doing right here, there's a couple of things. It's all coming together. It's a great time, really. If you're not doing what we're doing in here, we've just made it so much easier to do and for everything to work. We basically, all these years, we've been building on and adding on and adding on and adding on and adding things to make it easier for you to see the trades coming up, for you to understand what you should be looking for and looking at. And now we're able to take off all those crutches. We're able to remove all the crutches that everybody's been using all these years, all the arrows, because now you can see it. You can see if this is not spread out, you don't have a trade. If this is not oversold or overbought, you don't have a trade. If it is spread out and it is oversold, you have a trade coming up. You can get ready for it. We went to a larger time frame, so you have more time to get ready for it. We almost tripled the time frame on the YM and the Russell, and we doubled the time frame on the NQ. We stayed the same on the ES because the ES volatility doesn't support a larger time frame for the time period that we have in the morning. But we went to a larger time frame, so it's easier for me to bring the DOM over, put the trade on, and discuss the trade before it actually happens. And that's, so the whole educational part of this stuff, I've always said that there are 3 parts to every trade. There's the entry, the risk management, and the exit. Every part is important, but the risk management, the part in the middle, is where the money is made. Okay, that's where the money is made. Anybody can exit a trade, anybody can enter a trade. It's what you do once you're in the trade. And now, because we have larger time frames, we have more opportunity to do different things once you're in the trade. Trail your stop at different places, lock in profit at different places. Before, when you're working with a 7-tick range and you're looking at 10 ticks as a good profit, for a 7-tick range, that's more than a bar length. That's a good profit. You move your stop to break even, you're taking 4 ticks here and 4 ticks there, but you almost never take 25, 30, 40 ticks. Where today on the NQ, we took 40 ticks several times. Took 48 ticks, I think 4 times, 5 times, 6 times maybe. We had some smaller trades in there too, but we had a bunch of really good trades that went to the full target. They went even more than the full target. While I've been talking, there was one right here. You could have just taken 48 ticks right there, easy. These are 31 range bars, so you had about 100 ticks right there you could have just taken while I've been talking. And we were talking about that a little bit this morning. Jack was talking about that a little bit this morning. The bracket that I have on the NQ right now is a 9 by 12 point bracket. 9 by 12 point, not 9 by 12 tick. It's 9 by 12 point. Now, a 9 by 16 or 9 by 15 point 9 by 15 point would be a 36 by 60 bracket. That would certainly work. With today's volatility, that would work easily. And I know Jack went to a 9 by 16 point bracket. So he went to 64 target, I think he said. And he was hitting that, today too. I don't know if Jack might be in here right now. I don't know if he is, but he was hitting them today too. And when you have a lot of volatility, 64, you are in here. He took 64 a couple of times. But not every day is going to give you 64 ticks. Some days you'll get 30 ticks, but you can leave it open. So the times that it's going to go further than 30 ticks, you can go further than 30 ticks. But the whole idea is the entry part of it. Now, the entry part is so simple. You don't have, let me just show you. Let me step back here for you. And we'll go to the way it was. All the way Friday, a week ago today. All the way back to Friday, a week ago today. This is what it looked like. Okay, remember all this stuff, right? We're in here, we had the smaller time frames, and like something over here right now on the Russell or over here on the YM. I'm saying, okay, well, we're coming out of the oversold right here, and we are not touching the rim, but we're coming out of the oversold. It's a black arrow. The black arrow is pretty close to the swing high, so you probably don't want to take that. You want to wait for a pullback on that, and maybe don't take this one because it's not, it's too far away from the ribbon. Same thing over here. You wouldn't take this trade right now because we haven't come out of the oversold right here. So you'd have no trade here because it's not touching the ribbon. It's not going out of the oversold. Now, the alternative to that is saying, okay, well, the ribbon is spread out and we came out of the oversold. Came out of the oversold right here. So you take the trade, right? It's just a lot easier to do. Like right here on the ES right now. This is not oversold. It's not touching the ribbon. You can't take a trade. Right here, you'd say the ribbon is spread out and we're oversold. So I'd be taking the up close on this. Right now, and over here, the blue arrows and the green arrows and the black arrows, I'd be explaining to you what all the arrows mean and what they're all about. We're not doing that anymore, right? This is what we're at. All right, now in the smaller time frames, you get a lot more trades, but that means you have a lot more opportunity to stop out. And if you don't have a large enough sample size, that means you don't take enough trades, then there's a good chance that you're gonna have trouble getting back from it if you have multiple stop outs in a row. Now in here, we're just saying everything's nice and slow. We're oversold right here. The ribbon is spread out, so all we need is an up close. Look how easy this is right now. I can say, okay, I mean, in the ES, we haven't changed the time frame on the ES. The ES is still the same time frame. So we're buying 618 on the ES. It's just now the whole setup is easier for you to see and do. Okay, so on the ES, 618 is what you'd be buying, right? And it went down a little bit more. It looks like it's going to pull back down to the zone right here, but 1550, add 2 points to that, it'd be 1750. Okay, so all that stuff is the same. Now it's gone all the way down into the zone, so I'm going to cancel the order. But like over here on the NQ right now, the ribbon is not crunched up yet. The ribbon is still all one color. So that right there is a long trade on the NQ. Okay, so that right there is a long trade on the NQ. The ribbon is still spread out. Did I go long? I did go long. There it is. And we had the pull out of the oversold right here. So that's a valid long trade. 4 points into profit. So if it gets up to 75 right here, if it gets up to 75, which it hasn't done yet, almost there, then we'll bump that stop to break even. And now, it's not that hard to see all this and do all this, and it's all just a lot easier to put it all together now. Okay, so the stop on this is 36 ticks. The target is 48 ticks. Now you can put that target out a little bit farther if you wanted to. The stop you don't need to move, but the target you can move out further if you want to. The stop is good at 36, I think. Okay, so everything has changed and it's just gotten easier, and we're not going to change as far as the 2420 blueprint goes. That's still going to continue as the 2420 blueprint. That doesn't change anything. The fact that I completed the 20 months was there. I mean, I was doing that more as a proof of concept. As anything else, I was doing it as a proof of concept to show you that if you just stick to your guns, there it is right there. You just stick to your guns, you follow your plan and do the same thing again and again and again and again, that you're going to make money. And as long as you're consistently profitable, that's all you need. And you stick to the plan and do the same thing again and again and again and again. And over time, it's going to work out. I'm reminded of the tortoise and the hare. It's from a TV show, but I mean, you guys all know. I mean, the story about the tortoise in the air. Let's see, so we're waiting for this right now to get all the way up here. It's 19,500. Now that is way beyond my target, I think. Yeah, my target's right here at 82. So it's probably going to get all the way up there to that prior swing high. So this target right here, I can move out to 100 ticks. And, you know, if this is where it's going to go from this pivot right here, if it's going to go all the way up there from this pivot, then we're going to get all of that, all of this right here, and then probably twice as much, 3 times as much as that. Okay, and I believe that that's probably what it's doing right here, it's trying to do. So we've got a perfect entry for this pivot right here. Now I already could have taken, you know, 15, 20 ticks several times on this move. And what is the goal for the day? On the NQ, it's 20 ticks. I already could have easily had that on this one right here, I think, right? 71 up to 76 is right there. Be the 20 ticks. There it is. That's the goal for the day. So, you know, even though we've now made this super easy and it just showed you that there are many opportunities, don't lose sight of the fact that, you know, the 24/20 blueprint is proving, it's proof to you that if you just try to achieve the goal every day, and you do achieve the goal every day. Now you can bump that goal up if you want to. You know, once you start making, consistently start making more than $100 a contract, if you start making $200 a contract every day, then bump that goal up to 150. And you know, you can do that if you want to. See, this is way too close. I'm going to bump that up even more. I don't even know where that is right now. How many points that is? Where am I at? 71. 71 will go up to 91. Okay, because I think it is going to get all the way up there. All the way up there to 91. Now I have all this right here and I don't have anything locked in. I'm going to lock in just a point. But I'm way up on the NQ as it is. So this is letting it breathe right now. But what I was saying in here, the whole idea about the 24/20 blueprint, the whole concept of the 24/20 blueprint is to show you that you can start with one contract and work with your winnings. Work with your winnings, and it will eventually become a solid amount of money. You know, we're averaging $2,000 per hour, and that's doing it this way. That number is going to go up significantly by the end of the year, especially now that that new thing that we started doing, the time that we started and all that, you know, all these statistics that I'm going to be able to get from the 24/20 blueprint, it's just going to make everything else so much better. See, I'm still long on this thing. From way down here at 71, we have 10 points in it right there. So that was 40 ticks right there that it was just at. And, you know, I think it's going to go way more than that. It should go all the way up here, I imagine, and then some.
10 points is $200 per contract traded.
Yes. Yes. So for me, that
20
10
contracts,
points,
that's $4,000.
Yeah. Yes. So I am right now, just up that amount right now on this single trade. But we killed it today. So I'm just going to let this thing play out because I think it's going to. You see, as we get up to these different levels, using the diamond principle, and we can go back to that too. We had the same trade right here on the yes, I didn't get, but using the diamond principle. Now look how far up we are right now. Using the diamond principle, it should get up to right here at about this time, 13:21. So in this session, while we're still talking, if things keep going the way that they are right now, using the diamond principle, let me just draw it in for you. I'll use the actual numbers. Use the actual numbers for that. Okay. Now this is assuming that we get up to the swing high here. It's 1, 2, 3, 4, 5, 6, 7, 8. So it's going to be 16, be 24 bars over from here. So 1, 2, 3, 4, 5, 6, 7, 8, 10. So it should get up to this swing high right in here. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Oops, I didn't mean to do that. I got to slide it over some to do this whole thing. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. Right here, 1333. Okay, so let's use this and we'll get the price element. Okay. Price element is right there. So at 1333, we should be right here. If this does continue, if this does continue the way it's timed right now, if it does continue and give us a higher swing right over here after 8 bars, then that's where we'll be. We should be to complete the diamond principle. Okay, that was 6 bar over. I think I added it wrong. I think it's 8 bars less. 1, 2, 3, 4. Yeah, this is right. It should be right over here. 1326. Sorry. That's where it should be. Right? If the diamond principle does work out the way it should work out. So right now we're hitting some resistance right here where we had it before, and that's to be expected. I don't know that it's going to push it all the way back down. If it pushes it all the way back down, then I'm going to be out with 1 point on this whole big giant move. That'd be kind of foolish. I'm going to lock in some more on this because this is actually $100 a tick for me right now. So, okay, now that push up right there was a big one. But I'm going to go to 77 right there. That gives me what? 6 points. That's $2,400 right there. Now it should get up here, right? All the way up here right now. And there's my target up there. Okay. Now I had put my target. That was just, it was almost a random target. I should put the target up here at the prior swing high at 99.75, or what did I say I thought it was going to get up to? 19,500 is what I said. So I got to lock in some more on this, guys. This is, it's $100 a tick. So I would be a fool not to do this. So we now have 10 points in there. So that's a $4,000 trade locked in right there. And I'm out with $4,000. That's not too hard to take. But I do think it's going to get all the way up here. Okay, if you follow that. Now let me slide this over here. Now, okay, when you hit oversold, do you modify your thinking and pull your stop in to preserve profit and just let it roll? When you hit, oh, you mean when it goes back in here, and it goes, if you're in the trade, it goes all the way up here, and it's time for it to pull back? Well, that's, I identified this as a place where it was going to hit resistance right here, Jack. So you saw I just started locking stuff in because I really thought it was going to hit resistance right there. And that was really close to my target. It was like a couple of ticks away from my target right there. But yeah, when this gets up into the overbought, it doesn't usually go sideways in the overbought too long, a few bars in the sideways action in the overbought. But as soon as that starts coming out of the overbought, it's, you know, it's looking to get back down into the oversold and do it all over again. So this is stretching out. The whole diamond principle right here is stretching out. You know, this was based upon it getting above the prior swing high in 8 bars. So now it's 1, 2, 3, 4, 5, 6, 7, 8. So that's not going to happen. So this is going to get stretched out, probably out to where I had it originally. Is it 24 bars out? But this is the price it's going to try to go to. Anyway, it's 117. That was. Yeah. So for those of you guys who don't know, the question that Jack asked was, if you're in a trade like this one, and you know you think it's going to get up to the prior swing high, and it will, and it should, but if it gets up here into the overbought, do you modify your thinking and start locking in profit? And you should start locking in profit. I mean, like I said, I would have been a fool to just leave it here at break even or plus 1 point when I had all that money on the table. Yeah, you should lock in your profit. You can just let it go if that's how you want to trade it. You know, I could have my stop still down here.
Keep in mind, if you were only trading one contract, that's $400.
And that's 4 times the goal for the day.
Oh wait, is that right?
One contract. No, it's actually $100. It was $100.
$200.
Yeah, it was $100.
Wouldn't it be 200?
Yeah. No, it was 20 ticks is what I got. It was 20 ticks with 20 contracts. So with 2 contracts, it'd be $400. Because 10 points, 40 ticks, at $10 a tick with 2 contracts. I know it gets confusing. You start throwing out all those numbers, and then you get into the micros, where the micros are 1/10 of the price, and it can get confusing, but it's not that bad. We did have a great ES trade that triggered in the same time right there, and we actually have one that triggered right here on the YM too. The YM went enough to get stopped to break even, but it didn't continue. Okay. Yeah, the profit you give up, it's gone. But that doesn't really matter. It doesn't mean anything. I mean, how many trades did I miss today? Like I missed this trade right here talking to you guys, and that was a great trade. That was bigger than the trade that I just got. I can't go back and say, oh no, I missed that trade. My life is over. I'm going to quit trading. Okay, so this isn't going to happen, all this stuff here, because we didn't put it in the higher swing. If we did put it in the higher swing, then this would have happened, but it had to happen. I mean, we had to get that higher swing in place. So it didn't. All right. But that was a lot of stuff, a lot of words. I want to say anybody that's in here or anybody that's watching, if you are in the mentoring program and you're not in the passport program, the mentoring program, you just get to watch this in this session here and in the morning session. If you have passport, you get full access to the 3 trades range trigger, and that is, the ribbon. Everybody's got the ribbon. All programs have the ribbon, but if you want to do an upgrade to get from the mentoring to the passport, then let us know. Send an email, and we'll help you out with that. Okay. Yeah. That's the whole risk management thing, Jack. What Jack just said is we always miss thousands of life-changing trades every day, not too concerned with that, but he tries not to give a profit when in a trade. And that's all part of the risk management thing. And as we go forward on the larger time frames, that risk management stuff is going to come into play. Like when I said, when it gets up to here, there was resistance here before, we'll probably hit resistance again, and that's why I was trailing my stop. It wasn't so much because we got into the overbought here, but the overbought is also a thing. It's like right now we're in the overbought, and it should bounce down from the overbought into the oversold. The ribbon's not spread out, so we don't really have anything we can do with it, but it is a thing. I mean, it's a mathematical thing. That's what's making that happen. It's math that's making that happen. The math is derived from the actual price action, what has happened in the past. So it all, it all just works down to really identifying the patterns that are happening over and over again, and the indicators helping you identify where they are and when they are. If we did this, with no ribbon on, okay, if you had no ribbon and you were in here with no ribbon, you'd be taking trades in places like this one right here. You'd probably take a trade right there that would have stopped you out. Now the ribbon's going to stop you from taking that trade, right? And in places like right in here, you might have taken a trade. Well, not really so much there, but I don't know, in places where it gets choppy, you might have taken a trade where the ribbon would keep you out of it. Like right in here, for instance, you might have taken this trade right here. Well, this was actually an up close on a pull out of the overbought. That's unusual. But this down close right here, if that gave you a trade, it might have just stopped you out, just enough to stop you out there. All the chop in here, it's going to keep you out of this, where you might have gone long or short in here. The last trade that I took was right here. And I think even after the morning session ended, I took another trade. I took another short trade during the break. I think it was right here. I took this short over here during the break. And I got the full 48 ticks on that one too. But you see, not every trade works out. I took this one this morning that stopped me out. I took this one this morning that I ended up with a break even on. But I don't know how I ended up with a break even on that. I think it was going too fast and I wasn't paying attention. But these other ones, and you see the ribbon is there to help you identify when you're starting to get into chop and when the trend is weakening. So all the things that we used to have to identify a weak trend, they're still there. Like right now, you can see right here, this was a trade right here. right here. That was a trade. This one, not so much, but this one was a trade. This one, the ribbon was crunched up on, I think, right through here. This was definitely a trade right there, and you could have just taken another 48 or 64 ticks, Jack. Right, if I put the ribbon back on here, there it is, right in there. Okay. So, and that's another thing I wanted to point out to everybody that's in here right now. If you weren't in there this morning, you weren't in the partners meeting last night, I changed the context PP. Last night, there's a new version out here, and if you click on it, and actually if you click on it, if you go in here and you look at the script notes that I put in here last night, release notes, the first thing I did 15 hours ago was updated everything except the ribbon to be off by default. And then I did another one for the target table to key off of the BBC, BB3 cross, and they have to remain crossed for five bars for the table to switch. Okay, what that means is this. The table right now, we just crossed down right here. Okay, we can, let me do this. I'm going to do a bar replay. It'll be easier to show you. Okay, let's go to a 5-minute chart. Go to a 5-minute chart. Okay, and now you can almost see it right here in real time, but it hasn't crossed up. But if we do the replay of this, and we go over here, okay, you see right now, let me stretch it out so you can see it a little bit better. Right here, the BBC, which is the leading edge of the ribbon, is above the BB3, so it's giving you bullish targets right here. And if I put those on for you, let me just put those target lines on there for you. I wrote all this code after the meeting last night. I was hoping Mike R. But it gives you the long targets when you're above, when the BBC is above the BB3, when the ribbon is to the upside. Okay, and now if we turn this on, and we'll go through here bar by bar, and it's going to flip to the downside. And you see it's giving the long targets still up here, still giving the long targets, but now it's flipping down. Now it hasn't flipped down yet. The BBC is still above the BB3. Now right in here, it's going to get below it. Okay, so right there, it just got below it. It's still saying long targets right here because this is to keep it from flipping back and forth again and again in a period like this right here, or a period like this. It's got to go for 5 bars. Once it flips, it's going to go for 5 bars before it changes the targets. Okay, and as it goes a few more bars here, you'll see, there it is right there. Okay, so now it just flipped the targets from all long targets to all short targets, and it flipped all the target lines down. Now the target lines are based on pivots that are before the cross. Okay, so all that change went in last night for the context PP. All right, and one other thing that went in, you may have noticed, may not have noticed, is that when you put the context PP on, it goes on with just the ribbon on. Only the ribbon is enabled. All the other things are still in there. If you want to go in there and turn them all back on, they're all in here. Okay, the no trade zones, all that stuff, it's all still in here. You can turn it all back on, but by default, I shut it all off because I won't have to say 1,000 times to go in there and turn that stuff off. One thing that you can do, if you were using the blue arrows or any of the arrows before, and you're using the target tables based upon the blue arrows and all that, all those blue arrows are still in there. And if you want to use the target table based on the blue arrows, this right here, show target table based on ribbon trend, that is checked by default now. If you uncheck that, like right now, I don't know where we have any blue arrows, but if you uncheck that, it may change this to bullish. And see, it just changed it to bullish because we probably had a blue arrow, a long blue arrow back here somewhere. And so it changed all those to bullish targets. And you see it just flipped all the lines back up. Okay. So I know that's a lot of stuff for you to probably think about, a lot of words. But when it flips the targets like this, it's, if you have that unchecked, if you have that right there unchecked, it's going to be based upon the blue arrows. If you have it checked, then it's going to be based upon the BB3, BBC in the black line, the BBC and the BB3 cross. Okay. So if you just, if we follow this out, you'll see that it probably changes back again or something like that. I think it does. I think it does. I know, it could go faster. 3 times. Yeah, 3 updates per second. There we go. Okay, well, that was the end of it right there, I guess. Okay, so it didn't cross back. It's still got the bearish targets on here. It never crossed back on this time frame. Okay, but if we go back to the 31 range, you can't do bar replay on range bars. So we go back here to our 31 range, and you see the price did change, and it came back up, and the ribbon got all crunched up in here. So you didn't have a second opportunity. You had this one opportunity here on this short side, this one opportunity here that went a good probably 50 ticks, 50, 60 ticks. How many ticks? Did you get the 64 ticks out of this one, Jack? Looks like you probably should have. And then just got all crunched up again right here. So right now, it's based upon where the BBC is with respect to the BB3. Okay. All right. So all that stuff went in after the meeting last night. I put all that stuff in. So by default, it's just got what you see right here. And by default, it's going to have the target is going to be based upon the change of the BB3 BBC cross. Okay. Well, I think, Jack, what you had mentioned earlier about when it gets down into the oversold or into the overbought, that's usually 2 bar lengths. It's usually going to take 2 bar lengths for that to happen. And 2 bar lengths on a larger time frame like this is going to be pretty darn close to your target. And that's a good time to start locking in some profit. Okay. Let me shut off this bar replay. Okay, you can't do bar replay on the range bar. All right. So again, if anybody out there is watching right now and you have the mentoring package and you don't have the passport package, we'll give you a deal on the passport package. You got to email us at support@cfrn.net or support@mytradingiq.com. Either one of those, email us. So you have my phone number. You can text me and just let me know, and I'll send you out some sort of a deal. If you were in there on the open house or the free trial, you got another email today telling you what it takes. All right, and that's it. That is it. I know that was a lot of information, but we'll start next week. We'll be at 9 contracts in the 24/20 blueprint for the rest of this year. We're going to keep going with the blueprint for the rest of this year, but as though we started with 1 contract. All right, but this is how it's going to end. 24 months. And I kind of want to take a picture of this because the rest of the year is going to add. Well, that actually, that's going to keep adding up based on the information in here. So I'll work something up so that we have the actual result of this. But we ended our best month of the year on a really good day. Everything's just right. So if you haven't taken advantage of all the offers that we've been extending to you, it was a great time. And with that, I can pass it back out to fabulous. High CPU usage detected. That's because I have so many of these going. I have that one going, and that going. Yeah, I'll pass it back out to Fabulous Phoenix, Arizona, but let me just show you one more time. If you haven't taken the free trial with us, go here to My Trading IQ. Thanks, Steve. Go to mytradingiq.com. Go to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. When you click on that purple button, you'll be brought to this registration page. If you sign up for the trial today, you get the indicators over the weekend. All right, there's no credit card required for this. Gives you TradingView login ID. If you don't have a TradingView login ID, you can get one for free and mess around with this over the weekend. All right, you don't even have to sign up for TradingView. You get a free one, and you'll be able to put this indicator and the one down at the bottom on it for the weekend. All right, and that is it. You are welcome, Jack. All right. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep. All right. Recap of the morning session.
Today, it took 4 minutes and 2 trades to get to $4,800.
Great job.
Thank you.
Great job. Okay, for those of you that arrived late on the scene, we already showed this. The CTA targets came out last night at 6:20, 20 minutes after the market opened. All of our members and all of our trial members had all of these targets. Okay. Now, the logic alerts help you learn to read the chart. The CTAs help you determine if you've learned to read the chart properly. So we'll go back to, let's see, we already talked about, well, we already looked at the daily. Okay. Got a red candle. We're below that 38% fib extension. And I asked the question earlier, which to you seems like a higher probability that price is going to reverse, take out the high of the day, take out the 50% fib extension that held as resistance for all these days, overcome blue and climbing, overcome the 62, and take out the all-time historic high, or drop back to the daily BBC and the 24% fib retracement. That's what market structure is. It's being able to just simply look at a chart, any market, any time frame, and understand what the next high probability move is. No one knows what the market's going to do next. I don't care what the emails and all the websites say. Nobody knows. God created Adam. He did not give Adam the ability to change the past or to know the future. Fast forward thousands of years, and with algorithms and AI and all the indicators and oscillators on the planet Earth, you still don't know what's going to happen next. The idea is, since you can't know what's going to happen next, learn how to read a chart so you can know what the next high probability move is. Are you going to be right all the time? Of course not. Over the last 317 weeks and over 17,700 individual Logic 247 alerts, what we've averaged on a weekly basis is 20% or less of the alerts being stopped out simply based on market structure and that very simple process that we teach all of our passport holders. Now see how that red candle, it's gone back to a doji on the day. But the 38 is working as resistance right now versus support. We've got an inside day and it's a doji. We are heading into a holiday weekend. So that's not too surprising. Okay. All right. Let's wrap this up. Yes, here's where we opened last night. Consolidated at the zone. Got above the BBC here at the London Open. And made a run all the way up to the long target. This candle opened at 56.26 half. So from, let's just call it 27. They ran up 6 points to the long target. You only need 2 points to get your go for the day. Resistance sent us back to support, which sent us back to resistance. And the market tried to overcome this weekly zone, which was published Monday morning at 6:15 a.m. Eastern quite a few times. And while we spiked it, we did have one close above it, but then we pretty quickly reversed, and we didn't come anywhere near taking out yesterday's high. Hence, as you can see, an inside day. Not taking out yesterday's high or yesterday's low. And given the fact that we're heading into a holiday weekend, I'm suggesting or thinking that the closer we get to the bell, the quieter things are going to get. So, Let's get through the rest of these markets. Here's the Dow. This was the candle where the CTAs came out last night. We dropped to the zone, which we expect to be support till proven otherwise. And red and falling turned to blue and climbing. We got above the BBC. Here's the London Open. So we get a leg, a retracement, a leg, a retracement, and a leg, zone. So go from the zone, and in that same candle we went from, in this one candle, we went zone to zone. 41,420, 41,580. It's at 160 points from zone to zone. Blue and climbing turned to red and falling. That tells us we should probably start looking for lower prices. And we get a close here below the BBC. And then a lot of selling pressure or lack of buying pressure because we sliced through the zone, but we did not retrace back to the zone. At least we haven't yet. I mean, we still could. We got the BBC right at the zone, so that would be resistance times 2. What's more likely to happen, now the step line is starting to kind of hook to the right. If the step line crosses red and falling, see on the way down, you got price, step line, red and falling. If the step line crosses red and falling, probably see a retracement back up to this zone and the BBC. If the step line fails to cross red and falling, and we take out this low right here, then that gives us a pretty nice window of opportunity down here. 41,290 down to 41,245, so that's 45 points in that window. And it takes 20 points on the Dow to get your goal for the day. Based off market structure and the 30-minute chart, wouldn't consider long trades until we get back above the 30-minute BBC. And once price gets above the BBC, right here, you got a bearish cross. When you have, that's where the red line gets below the green line. When you have a bearish cross that leads to an extended move, first time price revisits that area will almost always be good resistance. Now, it may not happen today, but it very well may happen Sunday night. Okay? If it doesn't happen Sunday night, it can happen Monday. It's whenever price gets back to this area. It could be next Friday. It could be next month. Just know that you had a bearish cross, and the first time price, no matter how long it takes, when it gets back to this area, that's most likely going to be resistance, at least the first time up. Then you get a retracement, another run at it, maybe the second, the third attempt breaks through. Now, is that 100% true every time? No. There are very few things in the world of trading that are 100% all of the time. In fact, be very careful. All right. Check says it's 100% right 60% of the time. Okay. Fair enough. All right. So we see the window of opportunity here. Now, price could take out this low, and if it did, then you would have a window of opportunity down to this low. Made that a little big. And then you're at the zone, which you expect, of course, to be support. All right, to the Russell. Here's where we opened last night. right above the weekly zone, touched the zone right here. We just consolidated at the BBC. Red and falling turned to blue and climbing. And just like on the other markets we've looked at, London open and bang, we go right up to the target. Resistance sends the market to support. Back to resistance. This time we trade through BBC. Pull back holes. And that sends us lower. And again, there's that perfect stack. Price, step line, red and falling. But look at the step line. It's hooking right. As it crosses red and falling, should anticipate a retracement, or at least an attempted retracement. Back to the BBC and the zone. Now, depending upon how long we consolidate sideways and how long it takes for that step line to cross, if in fact it does cross, it hasn't crossed yet, then we could have a situation, because as we roll sideways, step line, or the BBC is going to drop to the zone. So on a retracement, you actually have resistance times 2. And then that would create a window of opportunity back down to these lows. On the NQ, we opened last night just below the zone, but we had support. When red and falling gets directly below price, it becomes support because it's probably on its way to turning into blue and climbing. It's always going to be one or the other. Blue and climbing, price rises. Red and falling, price drops. So blue and climbing. Here's that London open. And we got a leg and a retracement. A leg and a retracement. Leg and a retracement. And then bang, we hit the long target. We touched the zone. It was published Monday morning and it became good resistance. And it sent us down to this zone, published Monday morning, that has served as good support. And we've spiked it pretty nicely. In fact, this low on the way to the target, as you can see, is this low right here from yesterday. So I could have made that the short target, but I thought the market probably have more downside to it, and we very well may, because what have we done? We've pulled back to the BBC, and if this pullback holds, and we've got a window of opportunity right there. Now that would be enough to get your goal for the day. 41 down to 31 is enough to get your goal for the day. That's 41 to 21. So that's goal for the day times 2. And price very well. Could do this. Okay. Window of opportunity. You should be able to look at a 30-minute chart, any market, and know with a great degree of certainty what the next high probability move is. Now, we've got resistance overhead at the BBC. We've got support times 3 right here. Step line, red and falling, and the weekly zone. So if we break through all those 3 and take out the low of this candle right here, the 1 o'clock candle, then price could just drop. Not only to this low, but potentially all the way down to the short target. Crude, we opened here, pulled back to the BBC, pulled back held, and it took us right up to the target and the weekly zone. But again, we failed to take out yesterday's high. Okay. Consolidated for a few hours at the zone. Price dropped below the BBC, but the retracement held. Then we dropped to the zone, to the tick, pulled back to the BBC, and red and falling. Okay, so you got the bearish cross right there where the red line got below the green line. And what did that do? Took us all the way down to this zone, all the way down to this zone. But by the time this 30-minute candle closed, we had bounced all the way back up to this zone, which is 74.40/45. This zone is 73.65/70. The step line has crossed red and falling. The market has not been able to close below the zone. So now that the step line is crossed, if price can overcome the step line, we should see a retracement, at least back to the zone, and potentially all the way to the BBC. Works the same on every single market. Gold, we opened right at the BBC, but we had red and falling overhead, and that walked us down right to the target. Now, looks like we might have missed it by a couple ticks. What was the low there? 45.7. Is that the low? Yeah, so missed it by 7 ticks. But on the way down, this candle opened at 52, and we dropped to 45, or call it 48. So that's $400 per contract traded. When the market finds support, it's got to go look for resistance, which I found at the zone. Okay. Yesterday we poked above that zone, but not today. So we come back to the BBC, we catch a bounce into red and falling. That takes us below the BBC, takes us through the zone. Now here's an example of where we sliced through, then retraced back to the zone and continued in the direction of the slice. So right now we're consolidating at the zone. This is Friday, Thursday, Wednesday. Wednesday we found support at this zone. Looks like we're finding support here. Again today, the step line's about to cross. So on almost every market we've looked at, we're anticipating a retracement back to the BBC. Pullback holds more often than not. So you got to be patient. These are 30-minute charts. See if it holds. And you know which direction you should be trading in. If price were to overcome the BBC, then you got to watch this area right here. Bearish cross took place, 25.51. It's a first-time price, whether it's today, Sunday, or a week from now. Whenever price returns to 25.51, it will most likely be good resistance, at least the first time up. Or as Jack said, 100% of the time, 60% of the time. Okay? All right. Silver, we have rolled to the December contract. Here's where we opened last night, below the BBC. Made it almost to the short target. Not quite. Buyers came in. Drove us up. Red and falling, turned to blue and climbing. Now you only need 2 pennies in silver to get your goal for the day. So this one candle right here opened at 29.92 and ran up to 98. That's 6 pennies. So that candle's worth $300 per contract traded. If you earn the right to trade 10 contracts, then that's a $3,000 candle. Okay? But you don't start trading 10 contracts. Start in SIM. It's all part of the 24/20 blueprint. It's designed to help you go from 1 to 20 contracts over a period of 24 months. Hence the name 24/20 blueprint. Now, there's 4 months built in for you to learn the strategy if it takes that long for you to go live, okay? Now, when Michael started the 24/20 Blueprint last year in the live training room, obviously he already understood the strategy, so he didn't need that 4-month cushion and demo to learn the strategy. So he just started day one with 1 contract live. But when you become a member, you're going to get a copy of the 24/20 Blueprint. It's going to instruct you to put together 10 consecutive days in a row in your demo account where you reach your goal, 10 trades or less. Only then do you consider going live, okay? Unless you just want to blow up another account. The whole purpose of the 24/20 Blueprint is to help you not blow up another account. So once you've put together those 10 consecutive days in a row in Sim, the Blueprint will give you the green light to go live with 1 contract. Now that you're trading real money, your goal is to increase your account balance by $2,000. Once you do that, the Blueprint will give you the green light to add a 2nd contract. The big difference between the 1st and 2nd contract. First contract is funded with your startup capital. The 2nd contract is funded with profit you earned in the market. Blueprint will tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. Okay. But you only add 1 at a time when it's time. And you only add with profit you earned in the market. If you have the discipline to follow that, it makes it far more difficult to blow up another account. But if you don't follow the rules, if you break the rules, if you just decide to go rogue or off the res, that's totally not politically correct, but you get the point. Well, then you're kind of on your own, which defeats the whole purpose of becoming a member. Keep in mind, as you're doing that, as you're putting together those 10 consecutive days in a row in your demo account, you've got 2 hours of live training every trading day. Plus, as a passport holder, you have access to private one-on-one mentoring. So, trading can be a very lonely business. But with us, you got around-the-clock support. There's always somebody available to help you. When you take the trial, your next step should immediately be to get Telegram installed on your phone and on your desktop. That's where all of our traders are hanging out. That's where we communicate with everybody. That's where the weekly trading zones are distributed, the CTAs, the logic alerts. It's the heartbeat of the community. And what you'll find is a very positive, upbeat community. We don't tolerate any foolishness, okay? Our goal from day one was to have a family-friendly place where people could come and learn how to trade. So there aren't a bunch of egos in there in the discussion group competing with one another. We're all on the same page. We all have the same goal. Everybody wants to be able to get their goal for the day. To whom much is given, much is required. Stefan's a great example of that. He posts tons of charts every day with commentary. This is very helpful to so many traders. So we really appreciate that. And he's just a perfect example of what it means to give back. So Stefan, I don't know if you're tuned in or not, but we appreciate you. So resistance here pushes us along with red and falling below the BBC to the target and to the zone. Now, yesterday the market found support at the open and here. This was the 9:30 opening candle yesterday. We opened here, came all the way down to the zone, found support. By the time that 30-minute period was up, we're all the way back up to the BBC. And this was our first sign of weakness. We failed to take out this high. So we've got a high, a lower high, and then a double top here that is a lower high. Okay. So blue and climbing turns to red and falling. Expect lower prices. Down we go. We hit the zone. Support. Gives us a very nice bounce. Again, you only need 2 pennies to get your goal for the day. This next candle rips right through the zone. Now this is off the 10 o'clock news. We had so much news today. We talked about them all last night in the workshop. So we consolidated at the zone. We've dropped below it. You can go look left and see why. Price stopped dropping here. And the step line has crossed. So now price has to overcome the step line, overcome the zone, and we anticipate a retracement right back to the BBC. And we expect that to be good resistance until proven otherwise. If for whatever reason buyers decided they got to have silver and they push price above the BBC and above the zone, they got to watch this bearish cross up here, because there's a very high probability that will be good resistance. See, now that the step line is crossed, see how price is trying to climb? Now, had you been short all the way down, that step line crossing would not have gotten you out at the exact low. The structure of the market could have helped you get out close to the low. But you gotta go left. Okay. All right. One more market, the euro. Opened at the zone, consolidated, made a half-hearted attempt to get up to the long target. No dice. More consolidation. Blue and climbing turns to red and falling, takes us below the BBC, and that takes us right down to the target. Market finds support. It's got to go find resistance. There's resistance times 2. Zone and the BBC. From there, we get a leg. And looks like we're starting to get a retracement. See the step line crossing? So anticipate price pulling back to the BBC. Pull back held here. You had the bearish cross. This was the first pullback after the BBC. That first pullback after the bearish or bullish cross almost always holds. So this would be the second pullback. But it's still a very high probability that the pullback will hold, because it holds more often than it doesn't. So on the daily chart, we've still got that doji centered right on that 38% fib extension. And we'll probably end up with an inside day for the day. Keep in mind, Monday is a holiday, so we will not be here. But when the markets open Monday night, it's business as usual. The weekly zones that normally come out Monday morning at 6:15 a.m. Eastern will come out Tuesday morning at 6:15 a.m. Eastern. But Monday night, there will probably be CTAs and logic alerts. To become a member, if you've been on the trial, check your email. You should have gotten at least 1 or 2. Or go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. When you become a passport holder, you'll have 2 hours of live interactive training every trading day. You'll also have private one-on-one mentoring, no extra charge. Strategy you learn, the indicators that you own as a passport holder are fluid across all markets, all time frames. So whether you trade futures or stocks, crypto or Forex, or even ETFs, price flow is the same. From support to resistance, back to support, back to resistance, over and over. It's a never-ending cycle. You'll also get the Logic 247 alerts around the clock. You get the Concierge Trade Alert Report every evening shortly after the Globex Open when it's published. You get the weekly trading zones when they're published Monday morning, 6:15 a.m. Eastern. Except when Monday's a holiday, then it's Tuesday morning, 6:15 a.m. Eastern. And you'll be able to attend the members-only workshop like we had last night. Every Thursday night, 8 p.m. Eastern. Used to be 9 p.m. Eastern, then we changed it to 8 p.m. Eastern. I think that's worked out better for everybody. And we've had one, I think, every Thursday night except on Thanksgiving. There may have been one or two other instances that for some reason we didn't have a Thursday night members-only workshop going all the way back to 2008. It's a long time. So all that is yours when you become a passport holder. So again, if you've been on the trial, go check your email for specific instructions on how to become a full-fledged member with access to everything, all the resources that we have to offer. Group training, one-on-one mentoring, all of it. Everything a trader needs, all under one roof, one low price. For a wrap-up this week, which has been a good week, with our good word for the day. Yesterday, we talked about when God sends you an angel, part 1. So it only makes sense that today we do part 2. Psalm 91:11. He will order his angels to protect you wherever you go. So in what situation might God send an angel to help you? Number 1, when those you love and trust have disappointed you. Imagine how Hagar felt. In a joint decision with his wife Sarah, Abraham got Hagar pregnant in order to try and fulfill God's promise. Then, oops, Sarah conceived, as God said she would. And after Isaac was born, Abraham sent Hagar and Ishmael away into the wilderness. Not cool, right? Tough times back then. Not wanting to see her son die after their resources ran out, Hagar sat a bow shot away from Ishmael, lifted her voice, and wept. God sent an angel to tell her that her son was a child of destiny, from whom would come a great people. You can read about that in Genesis 21:18. So that was number 1. Here's number 2. Question is in what situation might God send an angel to you? Well, number 2 is when you're facing embarrassment and can't defend yourself. Mary planned to get married first and then have a baby. But God had a different plan. Not only was she facing public humiliation, but according to the law, she could be put to death. But God sent an angel to vindicate her and tell her that she was in the center of his will. Read Luke 1:34 through 38. Number 3, when you're grieving the death of someone you love and fearing for your future. Mary Magdalene loved Jesus more than life itself. So when he died and was buried, she was distraught and heartbroken. That's when God sent an angel to announce to two women in Matthew 28:6, he's not here, for he is risen. The Bible says to show hospitality to strangers, for some have entertained angels without knowing it. Hebrews 13:2. A cynical world will make you doubt that God actually loves you so much that he would send an angel to help you. Guess what? It's true. And that's our good word for today and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.